Hello dear traders, welcome to another MK Block summary. Let's look at all the analysis and predictions and trades which were done this week based on the market causality, the only approach in Forex which really works in the long term, which uses leading information, which is scalable. Okay, so let's get started. 2nd of June, Euro Yen are posted at 10.43. Euro Yen 1 hour upper inner range medium term stop, so we see the green line, so not difficult to predict that Euro Yen will go up and take out this line because the smart money algos push the market up in order to take out that stop target level, which is exactly what happened there. So an easy long trade towards an inner range target. We see it's like pretty much in the middle between the high and the low on the 1 hour chart there. Okay, so the next day on the well, not the next day, but on the 5th, so at 11:52, boom, target has been taken. Okay, classical inner range medium term stop trade, not difficult. Okay, we buy towards a target, and it takes 2-3 days sometimes, but eventually it gets taken. So beautiful, not difficult. What happened then the next day is like we see here, we outside a lower medium term stop, and again this target got taken out by the smart money algos. All right, I didn't trade that one. Then on the 7th, again we see, oh, typo here, a new medium term stop above the price, and again the price will move towards it and take it out. Okay, look at that, like clockwork. Here on the 8th, upper one taken, lower one taken, upper one taken. I mean, come on. So the ones who caught some of that price action, well done, not difficult. Then here on the 9th, so on Friday I posted a longer time frame picture, so we see this will probably also get taken out here. This lower MTS is just a few pips away, but overall we see like some shorties came into the market, so it looks slightly bullish on the higher time frame. So maybe this could be a good long entry if some shorties come in. That's a theme for next week, for example. But yeah, Euro Yen has been very giving. Let's look at its sister pair, Pound Yen, the beast. So here, 2nd of June, take note of how we had all these shorties coming in on the forward time frame, a squeeze and an up move as a result. Okay, this is what happens when you have dumb money sellers coming in trying to sell the market again and again and again. They're fueling the squeeze, and the smart money algos use this chance to actually push the market up against them, squeezing those sellers out of the market. Yeah, so that's the overall theme, and I know some of you have bought into the squeeze, which you can do. Then we had on the 5th this inner range MTS here at 11:54, which got taken nicely with a move. So nice scalp trade there, short trade towards this inner range target with a normal pullback. It doesn't need to test the range or anything, it's just a normal pullback, normal price action we see all the time. Okay, so filled the medium term stop, and then with a pin, look at that, the order gap zone here, boom. Okay, look at this precision. So these things are not random. People think it's all random. It's not random. Then on the 7th of June, similar to Euro Yen, also at an upper inner range medium term stop, some shorties, so to buy towards this inner range target against the dumb money shorties with squeeze support here is a great trade. Okay, so you're trading on the right side of the squeeze, you have like the new flow you want to see, shorties and a nice target, so that's a beautiful trade, quite safe trade. Okay, this will work and on 8 or 9 times out of 10. Think about that. Let that sink in. 8th of June, Pound Yen. Okay, so it took the upper target as expected, overshot it to complete some kind of gray pattern because some more shorties came in. Alright, so nice one in Pound Yen. Then on the 9th, I also posted the longer time frame again to show you, okay, on the day chart here, This smooth uptrend on the higher time frame is a result of dumb money sellers. Okay, the red bars coming in, selling the market, creating a squeeze on the higher time frame, and therefore the smart money algos pushing the market up more and more and more. Okay. And again, if you have that scenario on the higher time frame and you have like upper inner range, medium term stop targets, this combination is powerful and is a high bias trade, really. Yeah. So you can trade those things, those setups with confidence. Okay. Right. Okay. Let's continue. Australian dollar, 2nd of June. We had this upper MTS, some shorties. Boom. Look at that. Went exactly to the upper MTS, the little pullback. The next day, again, kissed the same target because it wasn't taken out yet. Here at 11:59, and then took it out. So here you can see on the higher time frame, we have shorties, we have some kind of squeeze going on, and we also have these moving averages on the day charts as a nice target. Okay, so this combination is good. You see, like boom. So this moving average got cleared on the 9th, and now it's moving towards the next moving average on the day chart to go up against the shorties. Okay, like we have an expanding squeeze line, so Australian dollar still looks bullish, so can still go up against the shorties, yeah, because the squeeze is expanding, it's not collapsing. Okay, so do not sell Australian dollar right now. Kiwi dollar, a little bit more complex this week. So we had the squeeze against the longies. Okay, the price coming down over several days and weeks, like you see here on the 4-hour chart. It cleared the low. At some point, the longies left the market, so we have a collapse in the green squeeze line, and therefore the 4-hour reversal energy took over, and they did a pullback up, clearing all these highs of any shorties who try to ride that move. Okay, so squeeze collapse, 4-hour energy, boom, up move. Okay, we've seen it so many times now. This should be very familiar. And then what happened is they filled the option strike target and then had a lower MTS and did a normal pullback towards the lower MTS. You see how this works. Okay, and remember, these things, nothing repaints. Okay, this comes and doesn't disappear. This comes, doesn't disappear. All right, you see everything leading, yeah, and it's not repainting anything. So that's quite amazing, isn't it? On the 8th then, so the market turned a bit neutral. We see like it did those the pullback, the MTS run, and then just went flat because look at that, the market is empty. You see, loader money flow, neither longies or shorties are dominating. Market is empty, so therefore the smart money algos allow the price to daddle around within some consolidation. Okay, look at this causality, how crazy. And on Friday we could see that we have like 1 to 3 MTS below the price, but they took the high. We also have an upper MTS, but it's far away. So if some longies come in next week, maybe this allows for a trade towards a lower MTS stops, for example, yeah. But that's only if longies come in. If shorties continue to sell, it will go up and clear this moving average, okay? Because both squeezes are over. Right now it looks like more shorties are coming in. So we are not just randomly selling towards this target. We wait until it tops out, maybe even takes an order gap zone. Okay? Right. Dollar cuts here on the 2nd of June. You see that we had this triangle pattern going on this theme. And then look at that. Longies get lured into buying, thinking, okay, the price will bounce back up from the lower line. And this is, of course, a big mistake because the smart money algos use it to push dollar cut all the way down against those longies, these dumb money buyers, yeah? Take note of that. The dumb money buyers think, oh, it's going to go up again within this pattern. No. The algos push the price all the way down, even below the lower triangle pattern line, even turn into a squeeze because longies insist on buying and averaging down and buying cheaply into the market. A big mistake. All that happens is because of the longies, the smart money algos push dollar cut down towards the day chart low. And as you can see, they can continue that. So we have a squeeze on the day chart, longies in the market, they are trapped, especially if more longies come and buy, they're gonna push dollar cut down again. They can clear those lows, okay? So it remains bearish for now. So classical case of dumb money, seeing a pattern, trading, thinking, okay, it's breaks the upside, and the smart money algos exactly doing the opposite. Never forget examples like that, okay? That's how Forex works. Not many people know that. Only on this channel you see these things, the reality. Okay, so 2nd of June, Euro Pound. A little bit similar. So what happened, you may remember we had this squeeze going on here, a beautiful squeeze with a nice upward sloping green squeeze line as a result of all the dumb money buyers coming in the market, trying to buy cheaply, trying to buy reversals. And what happens? The algos, the smart money detects that and pushes Euro Pound down against those dumb money buyers, clearing the lows, going exaggerated out of the range because more and more dumb money longies came in and bought Euro Pound. Okay. What we had then on the 5th, we had those two option signals. So they did this pullback once there was a bit of a mini collapse in the squeeze line, so a bit of longies left. And then later we again had two option strike signals in the other direction, which they also filled. Look at that, 1, 2, filled. Okay. Again, those trades, look, you're trading towards those inner range targets while there's a squeeze against the longies going on, so that you can do with confidence. Okay, these trades are worth a lot because you have a nice target. Okay, you are trading at the right side of the squeeze, and you even have dumb money flow going where you want it to be, namely on the long side. Okay, oh, beautiful. We then had a medium term stop. They just with a pin took the medium term stop. Again, please look at this precision. You can't make this up. And then on the 8th, they took this upper target nicely. The long trade towards this inner range target is only for advanced traders because there's still some kind of squeeze going on, still longies in the market. So this is only for advanced traders, I would say. And guess what? Look at this clockwork, please. Traders, comment, please, like, look at that. Boom, takes exactly that target and falls off from there. Yeah, because longies come in thinking, oh, it's going to go up, and guess what? They took the target, they did what they needed to do, and then all the way down against the longies towards the stops. Okay? Here on the longer time frame of day chart, you can see it at 6:31. Remember, we had this big clear out on the day chart. After that, this kind of gray pattern on the day chart, and look at that. Okay, longies coming in, squeeze on the high time frame, so a down move against the longies towards the low. Okay, and well done if you took some pips by shorting Euro Pound in this scenario here. Beautiful. Come on, I mean, this is not difficult. Come on. All right, a bit more complex this week, Euro Dollar, the big pair. Remember what happens when we have some nice easy trades in Euro Dollar, for example, for 1 or 2 weeks. Then the following 1 or 2 weeks sometimes can be more complex, especially when the price was pushed out of the range, like we had it in Euro Dollar. So anyway, so 2nd of June at 7:55 local time, they took the upper MTS, then they had this lower MTS with longies. So they wanted the lower MTS. It was not difficult to predict. And here on the 8th, you can see nicely, okay, we had this long downtrend against the dumb money longies in Euro Dollar, okay, a squeeze against the longies performed by the smart money algos. At some point, longies got kicked out or got margin calls, and then some shorties came in with a mini dumb money switch, so they did a 4-hour reversal up, a pullback after this nice retest of the low, okay. And then again on the upper band, longies come in, so a dumb money switch from shorties to longies again, so they do a 4 reversal down. Okay, take note of that. And then the market was a little bit empty with changing the money flow, so therefore like this consolidation within the 4-hour range. Okay, and here you see all the long positions and short positions. This is not random. And therefore I wrote like on the 9th neutral, so it took the high against the shorties, as you can see. But then these longies are on the way. You see here this green lines, the dumb money long positions are on the way, so they did a 4-hour move downwards on Friday, and as you can see, it can go down further again until here, this shorty nest, for example. Yes, but there's no squeeze going on. The dumb money flow is rather low, so euro dollar remains a little bit neutral. Maybe they will take this inner range medium term stop here. Okay. Pound dollar a bit similar. Okay, so it took this big medium term stop at the beginning of the week against the shorties, yeah. And then on the 8th, look at that. So it took exactly that target, overshot a little bit, then took the lower medium term stop, like a house clean, okay? Upper, lower, boom, boom. Also is changing the money flow, also has rather an empty market there, similar to euro dollar. After all, they're correlated because of that. It's because of the market structure. And then at some point at the end of the week, we saw that shorties kind of dominated the market. So it remains rather a little bit bullish. So cable can go up more, has some kind of squeeze going on now lately. So it can go up a little further. And especially if shorties come in and fuel that squeeze, it can even reach for the long-term stops during next week. So keep that in mind. Okay, do not try to sell pound dollar without a dumb money switch and without a collapse. Okay. Dollar yen, so it filled this option strike target. Then again, look, it goes to the lower of our band. Dumb money switch from longies to shorties. Okay, collapse in the squeeze line. So therefore, for our reversal up, I didn't trade this one because I wasn't at the desk when that happened. But I guess some of you caught that one. So for our reversal up, then what happened? It did a inner range medium term stop, pullback, move down exactly to the target, then pull back up. Okay, take note of this. Here we see the gap with the news announcements. Look, they use all that just to complete what they wanted to complete. Okay, as simple as that. But then towards the end of the week, dollar yen went a bit neutral. So again, empty market, dumb money flow changing. So it does this consolidation within the 4-hour range. Maybe some scalp trades there, but no big position trades to be done. So we see, of course, on the lower time frame, these are the moments where you can do range trading, okay? Boom. Medium term stop. Boom. Order gap zone. Boom. Medium term stop. Boom. Order gap zone, okay? Trying to fill, playing Pac-Man on the lower time frames, filling all those nice targets there, okay? You can do range scalping here. So if you caught some of those, well done. Okay, you don't have big money positions in the way, you can just trade within that range. But again, I would say rather for advanced traders. Okay, Euro Aussie, 2nd of June, look at that. Filled those two option strike targets and then filled this medium term stop with a nice move downwards. Okay, nice reversed gray pattern. Look at that. Then on the 5th, we had those option strike targets. Now, as you can see, that's what I wrote. We do not trade long towards these targets because we have a squeeze in the way. We don't buy into a squeeze against the longies. That's a cardinal sin. Never do this, okay? So like I wrote at 11:59, Euro Aussie has an open option strike target on the M30 time frame. However, we cannot trade that without the green squeeze line first sloping downwards. So only if the longies leave the market and this slopes downwards, then we can buy towards these option strike targets. But not before, because okay, that was a little tricky. So what happened then is, so we had a bit of a downward sloping squeeze line, as you can see. So therefore, like a move towards the upper strike targets, as shown before. But then again, the market went a little bit flat towards the end of the week. Okay. So as I wrote, Euro Aussie has an open option strike target, but also an ongoing squeeze against the dumb money longies complex. Okay. So in order to trade up towards the target, we want to see that line going down. Okay, which shows you that dumb money longies are leaving the market. Because look at that, like I show here on Friday, on the higher time frame with longies coming in and the move down towards the longies, clearing the moving average on the day chart, okay? And then even clearing the low, okay, because some longies came in, okay? Like a failed 4-hour reversal setup. But as you can see for next week, once longies leave the market, this collapses, and some shorties come in, we get a dumb money switch, then the 4-hour reversal would allow for an upper pullback next week in Euro Aussie towards those option strike targets, yeah? So keep that in mind for next week. A nice theme. Pound Aussie, So here, 2nd of June, again, look at that. Goes for the green line, the medium-term stop target. Okay, took that one out. Then even went for the second one, took the second one out. Okay, because shorties left the market. So first taken, second taken. Then the same thing. Okay, we also had this option strike target appearing, but again also the squeeze in the way, similar to Euro Aussie. Okay, see, that's why they're correlated, because the market structure is similar. Okay, and again they also did a similar thing, clearing the moving averages on the day chart. Bitcoin, remember before we had this exact pin towards the upper inner moving medium term stop, and then the down move filling the upper the lower medium term stop story, so doing some kind of house clean. And in the end, with longies dominating, okay, dominant longies trying to buy cheaply into Bitcoin. Therefore, the algos also in the crypto market pushing down Bitcoin, clearing the lows against those dominant longies. Okay, you see how cryptos become similar to Forex and not the other way around, something I've been preaching for years. Of course, with more and more algo trading, the smaller crypto markets will be more like Forex, not the other way around. Okay, people confuse that a lot. And even other markets will be more and more similar to Forex the more time passes. We see that already in gold, silver, and potentially even also stocks, by the way, at some point. But it's too early to tell. So Bitcoin went down against those dummy longies, cleared the low, and then did an aggressive pullback towards the upper stops. I didn't trade any of that. As you know, I just do a long-term play in Bitcoin. But interesting to see that, okay? Okay, gold. So gold took the lower medium-term stop, okay, after it took the upper one before, and then went pretty neutral, okay, with some longies coming in, down move, some shorties coming in, up move, within some kind of consolidation, so not much tradability there. After we got those nice trades last week, I didn't do those trades this week in gold. But on the lower time frame, yeah, you could do range scalping. You see, like it took this one, and even took this one with a pin. Okay, so this is a lower time frame play. Then I'm sure some of you scalped there. I didn't do that. Silver, so took the upper target, 1, 2, okay, the medium term stops, overshot a little and then came back down. Then shorties came in, so they retested the high. I didn't trade any of that. And then we see that after the shorts came in a bit of a squeeze, went up a little further, retesting the high. Okay. So you see, like some markets were less tradable, like gold and silver, and others were very tradable, like here Euro Yen. Remember those beautiful MTS runs? Okay. I predicted again some really good moves. Credit where credit is due. Nice ones here, pound yen. Boom. Okay. So the yen pairs gave some beautiful trades this week. Aussie also gave several nice ones. Kiwi, keep an eye on it, as I said before. Let's see what it does next there. So yeah, I mean, this is beautiful. You see, they're very simple rules you need to follow, okay? So do not trade against the squeeze. Okay, that's a cardinal sin. Do not do that unless there's a particular setup and you're very advanced. Otherwise, stay away from that. Look at the higher time frames and then look at the lower time frames to understand the big picture and then to understand the value of inner range trades also on the lower time frames. Okay. So as you can see, it's quite repetitive, right? It's not that we learn completely new stuff every week. No, when you look at the last MK block summaries, they're all repetitive. It's just different pairs give different kind of setups. That changes a little. The market modes in different pairs changes. You know, after we had this big downtrend in euro dollar, it then went a bit rangy. But it's very intuitive. It's not rocket science to figure that out. You just need to be a little street smart. You just need to be disciplined and execute well. That's it. You see, like, these scenarios are all very repetitive and they make a lot of sense when you look at them from the market causality perspective. Okay, it's not magic, it's not something random, it's not something erratic. This is like clockwork, and we are at a level right now where you can see we can predict moves with a high precision. You see how the price goes exactly to certain levels and then reacts. So That shows you that nothing is random there really. And please understand the implications of such a big statement, okay, in the biggest financial market in the world. Of course, that's why the causality is really probably the only approach which is very scalable. That's the reason why we do not have massive hedge funds trading Forex, okay? That's the reason why you cannot just take a statistical system and just scale it up. That would be easy, okay? That's not the case. If you scale it up, you end on the dumb money side, all right? Okay. Anyways, I wish you all a great weekend and a fantastic next trading week. Follow the principles, follow the rules. This is not a system. Okay, let me say that again. This is not a system. This is the market, all right? You know, there are certain statements I react allergic to. And one is, your market causality is a system. This is not a system. This is the market, okay? These are dominant positions. These are stops, okay? These are squeezes. This is a market structure. This is not a statistical system giving you some silly signals, okay? This is the actual market. Please allow me to say that again. This is the Forex market. You see live with leading info. Okay, lots of love. All the best.